In Chapter 10, we are talking about inventory, and we have two different types of inventory that's discussed in Chapter 10. Does anybody remember what they are? Well, it's on, the chapter's on accounts payable, but it also talked about how we took care of inventory. And I told you that one inventory type, we're not going to have any problems on it. We're going to be using the periodic inventory. But there's another way of keeping up with inventory, and that is the perpetual inventory. The perpetual inventory is discussed in this chapter, and when we buy something using the perpetual inventory, we're going to use the account merchandise inventory to record that purchase. Perpetual inventory will keep a running total, consistently changing with your purchases.
Up to date every year.
It will just be up to date as we purchase items. We don't have any problems in our Chapter 10 that I assigned for homework that deal with the perpetual inventory. Even if you use perpetual inventory, you may still have to go in and do a physical count of your merchandise just to make sure that it equals. I like to tell the story about the door company where my husband works. Someone told him that some of his doors were at the flea market. So somebody had been coming up to the docks in the night and taking doors and selling them at the flea market. Now they use a perpetual inventory, but every once in a while they have to do a physical count of everything. If you don't do a physical count, you're not going to know, unless somebody tells you they've seen your doors at the flea market, that something's missing. You still have to do the physical count. And you would use that account merchandise inventory to record those purchases. We're going to use the periodic inventory for all of our problems. What account are we going to use when we purchase something that we're going to resell to our customers? Purchases. So we're going to use that account. What kind of an account is purchases?
Cost.
It's the first C, I-C-E, that goes on the income statement. It's the first cost account that we've had. Now, we are going to have to do an adjustment at the end of the fiscal period to bring our account merchandise inventory up to date, because it's not going to be up to date. We're going to do that in Chapter 11. And we're going to go back to doing a worksheet, back to doing adjustments, and we'll have a new adjustment that's called merchandise inventory. We're going to use our account income summary to make that adjustment. So as you read Chapter 11, just be prepared for going back to the worksheet, and we'll do that next week. Also in Chapter 10, we talked about two contra cost accounts that we have. What are they?
Purchases, returns, and allowances, and purchases, discounts.
Okay, and those are contra cost accounts. Purchases will be a cost, and then we'll have the contra cost accounts. Now, when we talked about purchases, and I have the subsidiary ledger up here from the demo problem that we did the other day. We actually had 4 vendors that we were using. We're going to do this just like we did in Chapter 9 with accounts receivable. In accounts receivable, those were items that we sold to our customers. We have a controlling account with accounts receivable that's called accounts receivable, and then we have the subsidiary ledger that has a list of all of our customers. In Chapter 10, we're doing the same thing with our accounts payable. The controlling account will be accounts payable. That's our controlling account. We've had that account since Chapter 2. Okay? Now we're just going to have the subsidiary ledger that goes with that, so we know how much we owe each one of those suppliers. When we record our transactions in the journal, remember I've said we're going to be using that diagonal, where here's where we really have to have the diagonal. Because when we post, we're going to post this one to accounts payable and this one to the particular account that's in the subsidiary ledger. Our customers, or our suppliers and our customers, going back to Chapter 9, they don't have account numbers in this book. So we just will use a check mark when we post those. Okay? We'll just have to use the check mark. This book, for some reason, just didn't have account numbers there. Most of the time we do have account numbers for accounts receivable and accounts payable. Let me go back to another one of the problems. Oh, and I'll point this out. Now that we have covered almost all of the transactions that we could have take place in a business, every once in a while we're going to get one of those general transactions that we've had since Chapter 1, and this was just we purchased store supplies. Store supplies is an asset. Okay, it's not going to go in the purchases. Right, we're not going to resell it. It's items that we need. It just happens that we did it on account. That could have been a credit to cash if we had paid cash for those items. So when you're working on Paula's, I'm going to throw some of those general transactions that we've been working on since Chapter 1 in with the mix of everything else. In Paula's, you're going to have accounts receivable and accounts payable. And in your accounts receivable and in your accounts payable, I have a company that has the same name. So you're going to have to really pay attention. Is this a customer or is this a vendor? What's happening in that transaction? Is that accounts receivable or is that accounts payable? So I've kind of mixed it up a little bit. You're really going to have to put your thinking caps on to do Paula's. In our problems for 9 and 10, if you had a discount, they didn't give you any returns. So you didn't, or sales tax, so you didn't have to calculate the return with the sales tax. If we return something to Walmart, don't we want our sales tax back?
Yes.
We do. So we're going to have to do the same thing with our purchases and with our sales. If there's a sales tax involved and there's a return, we can have a return from a customer, or if we're the customer, we can return our items too. Does it always have to be for a defective reason that we return something?
No.
Could just be that it wasn't what we thought it was going to be. Some businesses have very strict policies about returning things and returning things in a timely manner. After so many days, you can't return it. There are some companies that just have absolutely no questions asked if you return something. Doesn't matter why you're bringing it back. There are just no questions. There's a store, I think it's Anna's Linens, and I don't shop there very often. But I was in there one day and some lady was trying to bring something back, and the sales clerk was not going to take it back. And so whenever I shop in there, I always make sure definitely it's something that I want, because they do not have a very friendly return policy. Has anybody else experienced that at that store? Return something at Walmart, do you ever get questioned? Return something at Target? I mean, even at Target, if it goes on sale, you can get the sale price the next week. If it goes on sale within 10 days, just take your receipt back. No questions asked. I just see it's in the sales this week. Will you give me the reduced price? And they always say yes. So, if you're a business, you want to have a good reputation like that, because one customer that's not happy, can they ruin you for a future purchase with other customers?
Yeah.
They can. Word of mouth, it really gets around whether you're a friendly company or not so friendly when it comes to returning items. Here is an item that was returned. It was a purchased item. So we have our new account called Purchases, Returns, and Allowances. And we would have a debit to our controlling account, accounts payable, and then that subsidiary account that's the Aeron company. All right, so those were just some of the transactions that we had. Here's another one that's just a general transaction that was office equipment, and here was one that was store supplies. We still can have terms, and when we have a term that's listed 310, what would that mean? 310.
3% off if paid within the first 10 days.
If paid within 10 days. If we had N30 listed after the terms, what would that mean?
That the balance is due after 30 days.
If we wanted to make just a partial payment, we could do that. And then when we paid off the rest of it, we'd have to pay the rest after the 30 days. Now, one of the items, and I don't have a picture of it, but I'll put something up here so that it looks like we're still talking about something. When we talked about gross sales or gross purchases, when we talk about gross sales, that's going to be our total sales that we have. If we have sales returns and allowances and sales discount, if we subtract those from the total sales, what is the item, the number that we have left? What is that called when it's sales? Total sales minus sales returns and allowances and minus sales discount.
Net sales?
Net sales. Same with our purchases. Total purchases, it's almost like our payroll when we use the term gross salary, gross wages. It will be our purchases minus our purchases, returns, and allowances minus our purchases discount will equal net purchases. Okay, so a couple of new terms that we have in this chapter 10 that we're really going to be using in chapter 11. If you haven't finished your homework for 9 and 10, you still have time. We'll pick it up on Tuesday next week. And again, we moved our test for the day to the same day that the evening class is taking theirs. They're going to take it the Tuesday night before Thanksgiving. You all will take yours that Tuesday. So we did change that day. Different from what we discussed in class. If you didn't get my email yesterday, please set that email up so that it goes to your favorite email. You can do that in Canvas. You can even have it set to go to your text messages if you want to, but make sure that you have that set up. Does anybody have any questions about 9 and 10? Maybe somebody watching the video has the same question if you have a question. Customers, accounts receivable or accounts payable?
Accounts receivable.
Okay. Vendors, suppliers, accounts receivable, accounts payable. Okay. We'll just have to remember that. And we'll talk about a debit memorandum and a credit memorandum when we look at Paula's. If we have a company in the accounts receivable and accounts payable that has the same name, and it says we're doing a credit memorandum, we'll have to know whether that's accounts receivable or accounts payable. If we have a debit memorandum, we'll have to know the same thing. Okay, so, all right, everybody should have their Paulas. If you'll go ahead